I would say the budgets have not reduced, but there is a very strong focus on optimization. And we are participating very strongly in those initiatives, leading with our machine-first delivery model approach and automation, which is creating challenges from an overall absolute revenue growth perspective. But we believe that structurally this is the right operating model, which addresses the need for these banks to get to a new operating cost base. And we are being we have had leadership in that path. And this leadership is getting reflected in many of the analyst reports that you see in this space. In the last 9 months of the 10 odd reports that have come, you will find that TCS is an absolute leader in 6 of them and is in the leadership quadrant in all of them. So we are very strongly participating in the shift in the operating model in BFSI, which we believe is very strong positioning as we look at it from a medium to long-term perspective. The other characteristic of North America has been that we are seeing strong addition of new accounts. There have been quite a few smaller banking clients that are coming into the fray. Some of it is like specialized mortgage providers and other specialized product providers. And our participation in many of these has also significantly gone up. We have added more than 20 new clients in this year in BFSI coming from these smaller category and newer geographies. So overall, BFSI is a complex picture. There is growth, there is transformation, and we are participating in both sides of it, and equally also being a very strategic partner in the operating model transformation journey that many of our clients are going through. Similarly, in retail, retail is also going through a very interesting phase. I think the headline aspect of retail is that many of the traditional retailers are significantly coming back and increasing their competitiveness. You would see this in, we have spoken in the past about Best Buy, accounts like Home Depot, Walmart. Many of these, their incremental performance and their competitiveness is significantly increasing. And in each of these, we are very strong partners to them and participating very strongly with them. Especially in the European theater and in UK, our participation in our growth in retail has been very strong. And some of our earlier deal wins that we had spoken about also ramped up nicely. North America is one of the largest markets, but is also quite challenged with individual financial events that are happening with some of the retailers impacting us. But we believe that overall the industry is in a turnaround phase, and that should position us well. But it will remain volatile in the short term. Life sciences and healthcare continues to be a standout performer for us. Once again, it is clocking revenues of more than 17%. This has been growing at 15 to 20% for many quarters now. And we see continued strong demand momentum in the life sciences and healthcare space. We are also doubling down on this space with investments in areas on what we call our connected drug development platform, the ADD platform. And that is also seeing strong uptake in the market. Coming to Europe as a whole, once again, we are participating very well in the transformation agenda that many of these clients are having. The geography is growing at more than 15%, which has been on a growth trend for us for many quarters now and continues to be on that path. The demand is coming fairly across the board. And even in areas like France and Germany, now we are participating very strongly in many of the new projects that are coming up there. And we have some very marquee wins, especially in the German market, that we are quite enthused about. Northern Europe also continues to, which has been an area of strength, and we are continuing to consolidate our position there. UK has had a soft quarter in relative terms and absolute terms also. Over the last 6 quarters, we have had more than 15% year-on-year growth in UK, whereas this quarter has been net negative, so that the year-on-year growth is at 7.5%. There is no surprises there. We had anticipated it given the environment in UK during these 3 months. And the weakness has come from areas like banking and manufacturing, which again was not entirely unanticipated. The net result of the political uncertainty, or rather the level of political uncertainty, has significantly receded. So probably in a quarter or two, we should be seeing UK getting back into a growth environment once they are done with the events that are scheduled to take place during this quarter. So overall, UK, we are quite confident when we look 2-3 quarters forward. From a customer addition perspective also, we have added net new customers across all bands, with the top band of more than $100 million customers growing by 2 on a year-on-year basis. Similarly, from our continuing investments in our patents and portfolio, the IP portfolio is continuing with increasing speed. We have now crossed 5,000 applied patents, and for the year, we have added more than 650 patents, new patents applied, and more than 350 granted, bringing our total patent portfolio to more than 1,200. So this goes hand in hand with our overall focus on organically developing our products and platforms portfolio, which is across multiple verticals and horizontal lines. Areas like Ignio added more than 10 new customers in this quarter, continues to grow well. Similarly, in retail, what we call our Algo Retail framework, we onboarded more than 10 new customers on the framework this quarter. So this goes hand in hand with our continuing investments in the IP side. Finally, coming to people, we have had steady growth on headcount. I mentioned last time about what we are doing in terms of onboarding our freshers earlier. So we had made more than 30,000 offers. And unlike previous years, this year in Q1 and Q2 itself, we brought all our freshers on board. So typically Q3 is actually lower than normal Q3. But for the 3 quarters together, so for the 9 months of the year, we have added 23,000 net headcount, which is comparable to the same period last year. But it is a mismatch in terms of the quarters. Our approach to headcount has been built systematically over time. You're all familiar with our philosophy of investing in our own people and then reskilling our own talent base. We have significantly been focusing on that over the last 5 years. And we believe that we now have the middle level, which is very strong, so that we should be able to expand the bottom of the pyramid by increasing our trainee intake. And Milind will talk more about our initiatives in that space. A lot of what we see on the margin expansion also is coming from this leverage of the investment that we have done on the training in our middle set of our talent pyramid. So all in all, challenging quarter, but I'm quite happy with the way we have negotiated this, and our continuing focus on being a key strategic partner to our customers' growth and transformation agenda is bearing a lot of fruit and seeing a lot of resonance across our customer base. In fact, even in challenging times like this and in a challenging industry like retail, we actually announced our largest custom developed application, fresh build of a custom developed application, which we are doing for transforming Walgreens in the pharmacy space in the US and UK. So I think people are starting to make significant bets on large programs to transform themselves and to reposition themselves. And TCS is an integral part of this strategic shift that is happening in the market. So once again, welcome all of you. And I will take questions and we'll address any questions that you have. Thank you.
Thank you, sir. We will now begin with the Q&A. In the interest of time, I would request you to please restrict yourselves to 2 questions. The first question is from Priya Sheth from CNBC TV 18.
to ask on the margin expansion. Can you break that up for us in terms of how much has been the currency benefit out there? I also wanted to understand that with regards to the whole BFSI and retail space, you spoke about it. You said UK and US has been challenging for BFSI. When can we expect some sort of turnaround out there? And in terms of the demand environment, how is that shaping up? And also on client budgets, I'm sure you have visibility on client budgets going forward. So for the year, what does it stand at? And lastly, on the digital contribution, give us a sense on how much digital contributed this year and what's the kind of growth that you've seen?
Okay. Let me try and do. So on the margin side of it, we have not been breaking out that, but let me put it this way, that the impact of currency on revenue has been given, which is from 0.3, it is 1.3 in terms of dollar terms and 2.3 on, or 2.2 on the rupee terms. And the translation of currency gain from there to the margin is similar to earlier periods, but we are not breaking that up. And the rest of it is coming from the efficiency parameters that I spoke about and our participation in the new services. More importantly, we believe that as we have been reiterating for some time now, we believe that this kind of structural defense of margin coming through a very heavy focus on investment in our own talent pool and our ability to expand that talent base is something that we are confident that we can defend into the medium and long term, and we are focused on that trajectory that we have always spoken about. Your second question was on BFSI and retail. It is a difficult game to call, but retail technically has done better this quarter compared to last quarter. We believe that in retail, in the medium to long term, there is visibility on how retailers are turning around, what the new business models are. So we are quite optimistic about it. One-off events can happen, a bankruptcy or a Chapter 11 filing, which is also part of the transformative process in these markets. So it's not a net negative, it is a transition period and part of the transformative process. And we are very aggressively participating. So some of that risk will also be with us, but we are quite confident about it in the medium term perspective. BFSI is slightly more complex because there is a whole plethora of operating environments at a geographical spread as well as from a size spread perspective. From a geography, as I said, we are participating very well in places like Europe, Australia, etc. In US, we are going down to the smaller and newer entities, more specialized providers, and participating very well. And in the more larger and traditional ones, we are participating in their cost optimization and operating model transformation using our MFDM framework. So overall, as an integrated whole, BFSI is too large to give a single message. But I think we are positioned on the right side of this change that is going on. I've lost track of your third and fourth questions.
On client budgets, if you could give us some visibility on that.
Client budgets is too early to call in Jan. Obviously, there was a bit of tepidness going into the budgeting season, but how it turns out, and you know, the mood has been swinging. There is a trade war on, there is not a trade war on. So we'll see how it actually translates to money on the ground a month or two later. So towards the end of this quarter, we should be in a better position to talk about it.
And on the digital contribution, what does it stand at this point in time, and what has been the growth that you've seen?
We have spoken about it in the past that deals are becoming more complex, and large deals now pretty much have leveraged digital components across. So this breaking out of the revenue between digital and non-digital is becoming a non-value adding part of it. So from this quarter, we are discontinuing to share this breakup. But I believe that this technology is mainstream enough that it's no longer two different schemes. Its growth and its optimization are the two themes.
Thank you, Priya. Our next question is from Pankaj Podar from ET Now.
Hi sir, just wanted to understand what has been the TCV deal signing in this quarter, and also you mentioned that BFSI overall is going through a transition. So what sort of opportunity does it give for a company like TCS?
Sure, I'll take the first one and let NGS talk about BFSI. The TCV overall, aggregate TCV for this quarter is 6 billion, and it brings the first 3 quarters of this year to 18 billion is the TCV. And when we compare that to the same period last year, it is up 22% over the same period. So that gives a sense of the kind of activity in the market, and we are participating strongly. And Jason, you want to talk about the BFSI side?
See, overall, banking, financial services, and insurance, if you put it as a whole thing, we are extremely pleased with what we have done. And since there is a lot of you have put out in the market that BFSI is slowing down, retail is going somewhere, manufacturing is going this way, etc., we took a step back and then analyzed our entire BFSI client portfolio. Okay, and I'm extremely pleased to report that we are gaining market share in BFSI over the last 4 quarters. Right? That's the first key point that I want all of you to note. Right? The second thing is insurance. They are rocking. Okay, they are just going and leveraging digital technology all over the place, and our insurance portfolio is doing extremely well across. Right? I think Rajesh mentioned about Nordics, Europe, Australia. We're doing really well. Right? And in the large banks portfolio, right? If you really look at the large banks, I think about 4 quarters ago I mentioned that more for less is giving into less is more. Right? I mentioned about it, which essentially means that they're all adopting artificial intelligence and automation as a main lever to bring things together, to integrate technology operation, whether you call it tech is eating ops or ops is going to eat techs, right? But their intent is to bring these things together and optimize, right? So we have a responsibility to leverage our machine first delivery model to disrupt ourselves to be staying even more relevant to our customers, which is the opportunity that we are participating. While market share is increasing, as I said, but overall the growth is coming down because of the efficiencies that we are also bringing and adding value to our customers. Right? Key opportunities, almost, if you take Canada, UK, US, everybody is looking at payments as a huge transformation. They're all very excited about what we have done in India, right? Especially using UPI and digital stack that we have built in, and it's very, very relevant. And we are working with each one of these organizations in these countries. So payments is a very big area of focus. Then naturally, wealth and incorporating artificial intelligence, algorithmic way of looking at wealth management portfolio optimization, they're all another set of opportunities which we are seeing, right? But net, I think, BFSI, we continue to see opportunities. That's an industry where growth, efficiency, innovation, all the 3 of them are at play. So in a way that we are running a marathon and a sprint at the same time.
Right. Also, just one question more. What is the quarter-on-quarter CC growth?
0.3%.
0.3.
Thank you, Pankaj. Our next question is from Sajit Mangat from Bloomberg Quint.
Hi Rajesh, Happy New Year. My first question is, for the 9 months, you grew at 7.9% in revenue, rupee terms, and with $18 billion of TCV in the last 9 months, growing at 22% year on year. What is the kind of growth you see, given the kind of momentum now you have picked up in Q3? Will you be able to cross the 8% revenue growth mark? Because I want to see, we saw some slowdown in execution in Q2, but now it seems it has come back, and now your momentum is just building up. So will you be able to do that? The second is that you have 25 to 28% margin, and that's that's the aim which you said you hit 25% in Q3, but we have enough levers to end the year about 25%. And the third is about BFSI space. Can you give a little more color on where is the pain over? Because Rajesh spoke about the fact that UK will come back in the quarter or two, but US. What is this, what are you hearing from clients there? And I just wanted you to explain the fact that you said budgets are not getting cut, but they're getting optimized. What does it mean?
Yeah. Okay. So I'll take the first one, BFSI, and then we'll let Ramki take the margin one. Overall growth, as you said, last year we did 11.5%, 11.4. We are not going to be anywhere near that. If we do better than 8, I'll be quite happy. But it is somewhere in that range. There's no taking away from it because the 2 quarters have been whatever they are. So I think that's not, the range of possibilities is not very wide there. But we are more optimistic about what comes after that. We'll have to wait and see how this quarter also plays out. But for the structural reasons that I told you, I think that we should be in a better position as we go forward into the next year. But early days yet to start and try to quantify that. BFSI.
Yeah. See, as I said, BFSI, the significant opportunities. Payments and wealth I already talked about. People continue to invest in core systems transformation. And then people are looking at opportunities like setting up a completely crypto bank. Those kind of opportunities are coming. Rajesh also mentioned about large growth and transformation programs in retail. Walgreens is a case in point. Likewise, we see opportunities in insurance as well as in banking. The policy administration systems, now the core transformations purely from closed books, we're also seeing opportunities. And we are seeing customers moving open books into a similar model. So overall, from my perspective, as far as BFSI is concerned, there are no pains, only gains.
Yeah, I think you talked about levers and Rajesh talked about it. In fact, one of the things is definitely where over the years we have been investing in building the skills, especially around many of the new technologies, and that has reached a very fairly matured level. So there is an opportunity to expand the base. So if you look at it as a pyramid, to expand the base and to do that. So that will definitely have a benefit as we go along in terms of how we drive our costs as well. Apart from that, of course, we will continue to focus on many of the efficiency measures. And in fact, in the current quarter itself, if you look at many of the line items, that is very clearly reflected. Utilization is already at a fairly very high level, but we will continue to focus on that. And lastly, we've always said that growth as well as currency, these are other factors which will. So we continue to stay focused and we will do that.
Thank you.
On budgets coming down, budgets are not coming down, but clients are optimizing.
Yeah, where I was coming from was that the cost focus that customers are doing is on resetting their structural cost base rather than actually an absolute cost reduction. So they are not increasing the budgets in line with the kind of growth that we're seeing in many of these clients, but they're looking at getting, like NGS said, more from less. And that is the journey that many of them are on. And we are participating very strongly in it, leading with our MFDM framework and the solution set that we have there.
Does it impact margins also?
Sajid will.
So, because we are leading with it on a technology leveraged, IP leveraged way, actually it is a net win-win. There might be some amount of transition in it, but we believe that when we get to the final optimized cost base, it will be a net win for both the customer and for us.
Thank you, Sajid. Our next question is from Harshada Sawant, CNBC Awaz.
Good evening, gentlemen. Rajesh, you mentioned 20 new clients in the BFSI segment. Could you elaborate on the texture of these clients? How big are they? How small are they? Also, which your other deal wins? How is it shaping up for perhaps retail or digital? What is the visibility there?
Okay, so it's a full spectrum of it, but one of the things I want to highlight is that, especially in the North American market, there has been a fair amount of fragmentation of different parts of the banking product portfolio. Specialized providers emerging in areas like mortgages, in areas like personal loans and other areas. And we are now starting to participate in many of these sides. Similarly, on the so-called buy side of the capital markets, which is the asset managers and many of the space there, there also we are increasing our participation. So we are moving away from the pure traditional universal bank kind of a set and getting more into the infrastructure and on the specialized product provider kind of side. So those are one area. And in Europe, especially Northern Europe and other markets, we are systematically increasing our footprint into many of the Nordic areas, in the Baltics, etc.
I have another question. Since you mentioned capital markets, I remember the second quarter you'd mentioned capital markets is where there was a slowdown. Are things picking up because market seem to be on a high, especially when it comes to the US? Are things looking good, and will that turn around into greater numbers in the coming quarter as well?
Actually, this is, I suppose we are not the only ones that were looking at the buoyancy in the equity markets, and obviously the banks are making a lot of money on the trading side. You would have seen the results that came in. Unfortunately, that's not translating into growth for us from these guys. So the sell side of the capital markets continues to be a challenging space for us, and we are also looking at it as to what do we need to do to realign ourselves with where the growth is. But typically, trading-led gains don't necessarily result in technology-led changes. So maybe that's one, but we are not taking that as an answer. And we are also challenging ourselves that how do we participate in the buoyancy that we see all around.
Thank you, Harshada. Our next question is from Romita from Mint.
So first thing would be in terms of banks. Over the past quarter, you announced a lot of large deals. So any numbers, any major milestones that we can talk about with respect to banks this time? Since you also mentioned in US you were expecting some milestones in this particular quarter. So if there's anything on that front. And also another thing you had mentioned was the kind of large deals in consulting space were also growing. So do we get to hear kind of a breakup in terms of consulting deals, the size, the scope of these deals?
Let me take the second one, and for banks, let NGS take it. So the one that I mentioned, for example, the Walgreens one, this is a complete transformation of their entire pharmacy portfolio. So these are not consulting development separately deals. These are integrated deals. It requires a lot of domain knowledge. It requires to be able to reimagine that space and to be able to develop it. To put the size in perspective, at close to this is the by far the largest fixed price pure transformation build that we have done, probably in the last 5-10 years. So that's the kind of nature of the deal. And these are the kind of ones that we believe will be the going forward. We had spoken earlier about the work that we had done for Bayer in their M&A side when they went through a systematic program of carve-outs to go for regulatory compliance as part of their Monsanto deal. Similarly, earlier we have participated with a very large process manufacturing player in US, where they did a merge and then a spin out. And so all of these are heavily consulting leveraged, but it requires an integrated approach